And I'm delighted Carolyn and Peter asked me to come and moderate such a great panel. Our panel here is Who Pays? Funding America's 5G Infrastructure. And before we do our introductions, I want to remind everyone that we do have a conversation on Twitter. It's hashtag Gtown Policy, hashtag 5G. So they're, I think, sprinkled throughout the room. So as a reminder, I'll put it right in front of me. So we're really excited today. I was traveling with Carolyn and Peter on Monday through New York, and it was a lot of talk about 5G, and I can tell you that my world, Wall Street, is all in. We're trying to learn as much as we can because many of the companies we follow are very much invested. And so we're going to do kind of a deep dive on that front. But I'm going to go from my left to my right. Let me just make the introductions. On my immediate left, Aaron Blazner, Senior Partner of Atlantic-ACM. To his left, is Pat Brogan, Vice President of U.S. Telecom. To his left is Anna Maria Kovas, Visiting Senior Policy Scholar here at Georgetown Center for Business and Public Policy. And then to Anna Maria's left is Mark Stoden, Analyst at Moody's Investor Services. So why don't we just go down quickly and tell us a little bit about your job, your firm, and then we'll deep dive into questions. Mark, why don't we start?
Okay, thank you. And thank you for here today. I'm a telecom analyst at Moody's, and I cover U.S. telecoms, so all the large names that you're familiar with. Moody's is a credit rating agency, and we assign credit ratings for corporate bonds, amongst other financial instruments. So we're a kind of key player in the debt capital markets.
I was a financial analyst for close to 3 decades, retired in 2010 from that, and have been at the Georgetown Center since then doing research on various telecommunications issues.
And I'm Pat Brogan. I'm with U.S. Telecom. We're a trade association here in D.C., and we represent broadband providers, including some of the nation's largest, as well as mid-size and rural telecommunications providers.
I am Aaron Blazer. I'm a senior partner with Atlantic-ACM. Atlantic-ACM is a strategy consulting firm focused on advisory in the telecom and technology space. We spend about 30% of our time advising investors, generally private equity investors, and about the other 70% advising operators and technology vendors on go-forward strategy, market opportunity, M&A due diligence, and the like.
Great. And I'm just going to know my notes and questions are on my phone, so I'm not looking at text and whatnot. I'm just looking at my notes. So, well, maybe we heard a lot about in the prior panel the need for 5G, the need for densification, and that's all well and good, but someone has to pay for it. So maybe history can kind of show us a lesson. Can we talk a little bit about, put some meat on the bone about numbers we've seen in prior Gs? Maybe we could go, Anna Maria, start there, and then we can discuss what the cost of 5G.
Sure. If you look back historically, CTIA's numbers, they put out numbers every year, and they'll tell you that the industry at this point has invested roughly $500 billion in CapEx over its history. FCC data will tell you that roughly $115 billion has been spent on buying spectrum directly from the auctions. If you look at more recent years, for 3G, the average annual CapEx was about $23 billion. That increased to roughly $30 billion on average for 4G. And there are projections out there that over the next 7 years, for a combination of existing infrastructure and the upgrade to 5G, we're going to go up to as much as $40 billion per year.
Per year.
Per year. Total of 275 over the next 7 years.
Got it.
So it's quite an increase that at least some folks are expecting.
Now, maybe I'll add, are the capital markets willing to fund that? And then we'll get into maybe how the players can actually pay for it. How do you think of the capital markets, especially the debt markets? I'm more equity, but are focused on would they be open to investment in infrastructure as long as it kind of includes the infrastructure buzzword?
I would say, today's debt markets are quite frothy within the corporate world. U.S. high yield market, is very robust demand. We were having kind of a record year for issuance for both investment grade and high yield bonds. And so today, the environment is quite supportive of continued investment. At the same time, the credit quality of the telecom sector has kind of steadily deteriorated over the past decade. AT&T and Verizon used to be single A credits, and now they're both kind of solid triple B credits. The rest of the entire telecom space are high yield issuers. And so any deterioration in the credit markets, would make capital raising a bit more challenging. On the other hand, what we are seeing at Moody's is we see a kind of a new phase of private company sponsors coming through. So, and we see this in both the data center and the fiber carrier space, as well as, for some small type of tower infrastructure operators. And these companies are starting to attract equity sponsors that are not the traditional private equity firms, that you're familiar with, but more on the kind of non-US infrastructure type investors who look to buy assets in, say, pipelines or ports or airports, are now thinking about communications infrastructure as an asset class. And it's very early days. Some of these investments are quite small, but I think the trend suggests that there might be a new base of equity capital seeking to put to work, and because these small private entities, you can lever that with a lot of debt. So that I think that area is something to keep an eye on with respect to the infrastructure investment needed to support 5G, particularly as the traditional carriers' credit quality continues to deteriorate.
Right. And I guess, though, does that, Mark, those other investors coming to the table increase the credibility about and we're going to get into the business case model for 5G, but does that, from where you sit, because some cases, some might say they're all trying to kill each other. AT&T is going into Verizon markets, Verizon's going into, Comcast is clearly there. How does that work? Would Moody's be more willing to put capital toward or be supportive of capital toward like the infrastructure players versus the carriers themselves?
Well, I don't know if it's smart money that's coming in, but it's money, right? So these assets they attract very high equity multiples.
Yep.
Right? And so there's a natural tendency for traditional carriers and service providers who are capitalized at, say, an 8 times enterprise multiple, to carve out an asset and try to capitalize it at 15 times EBITDA, right? Mm-hmm. And so because it's somewhat chicken and egg, right? Is this a good asset class, or is it just an overpriced asset class? And the growth potential suggests that you can drive a higher multiple of EBITDA, but it's hard for us to know for certain. Is the private equity retreat a canary in the coal mine?
Right. Okay. Pat, how about you? You represent a lot of these carriers that we're discussing. How do they think of the world and the investment right now?
Well, it's a good point, because I'd like to piggyback on what Anna Maria has said about the wireless investment figures. Now, some of those may or may not include backhaul as part of it. I imagine there's some backhaul in there, but for the 5th generation and going forward, the wireline industry is going to be absolutely essential to the success of this. And fiber investment is going to be a key part of this. Deloitte put out a study that said that we need something along the lines of $130 to $150 billion of increased fiber deployment in the country over a period, I think it was 5 or 6 years. But the key point that I want to make some of this is going to be for the small cells that we heard about, for densification. Some of it is going to be for broadband competition and bringing bringing fiber closer to premises, and some of it may be for building out fiber, bringing fiber further into rural America. But this is a significant expense that's going to be part of that overall cost picture.
Aaron, you've been very helpful for one of our key themes we've written a lot about, as Peter and Carolyn know, and Aaron has helped me with, is fiber deep. We need more fiber here. What are your thoughts? Where are we in that runway? Are we, the overused baseball analogy, what inning are we in that front?
Yeah, I think that's a pretty good question. I think one of the things we're seeing within the fiber space is we are, the ushering in of LTE drove a heavy amount of construction of fiber deeper and denser into cell sites, as you saw this huge conversion from copper to fiber networks. And along with what's gone on to the business market as well as the fiber to the home market, you've seen massive investment over the last 5, 7, 10 years in fiber to really meet these demands that were not able to be met at the initial infrastructure. So we tend to think we're kind of mid-ball game on the fiber front. The one kind of curveball that comes in there that could push us back earlier in the game is really, as networks become denser, your fiber infrastructure that you built may not fit the need that is today, right? We're seeing networks built with heavier counts of fiber, more splice points, et cetera, to handle densification and be able to connect all these sites or locations that need ultimately fiber connectivity. Unfortunately, when we look at the space today, we see it countered by, from a infrastructure provider, we see returns on builds coming down drastically from what they were 5 years ago when when operators were not facing as much kind of top line revenue pressure, there was less cost structure pressure, which ultimately meant fiber operators could get much better returns on their builds, especially in the wireless infrastructure space. So one of the troublesome areas that we've run into and spent a lot of time from a strategy perspective is I've had a number of fiber operators come to us and say, okay, if we're going to spend our next $100 million in capital, should we be spending it to support wireless infrastructure builds? Should we be chasing business customer builds? Where should we be deploying it? And how do we get the best return on those private equity dollars that we're going to deploy? And if you look at returns from 5 years ago versus today in the wireless market, with the expectation for cost structure shifts for wireless companies, the return structure has come down. So deploying fiber has gotten harder from an economic perspective if you're a fiber provider, but yet we need more of it, and we need it to be deeper and denser and spliceable in more areas. So it's one of these kind of ongoing battles that we fight from a cost structure and financing and potential return perspective.
If you look at, my thought looking at what Verizon is doing, does that get harder because Verizon seems to be aggressively building its own, or has plans to aggressively build its own fiber? AT&T reported last night they seem to be talking about fiber. So if you're an independent fiber provider, now the big bear has woken up and actually might be building their own fiber. Is that a shift that's also changed returns?
Well, at the end of the day, the cost of capital for somebody like Verizon or AT&T versus even Zayo or name your favorite private fiber infrastructure provider, cost of capital is going to be lower. Cost of construction is potentially lower. It depends how hard you can push your vendors and whether they can get it delivered. Ultimately, I think as Google proved, there's no real silver bullet to building networks faster than the next guy. It requires a lot of people on the ground doing all the hard labor that's required out there. Network is 80% cost of deploying network is labor. So, it's one of these things where we don't see the cost structure changing for any number of the vendors, and so the cost of capital being lower for those larger providers gives them some reason to at least try to self-deploy. Now there's a massive amount of blocking and tackling there that needs to happen to make sure those deployments are efficient. So we ultimately think what you'll see in 3 to 5 years is it coming back to some mix of the independent fiber provider, independent telecom, wireline infrastructure provider, combined with self-builds occurring in certain areas. Verizon obviously earmarked some major deployments across a whole slew of metro markets and is allocating a significant amount of capital potentially to it. So that remains to be seen how efficiently they can be at building those networks, but it's by no means going to be ubiquitous and cover everything. So it's going to leave opportunities.
I think part of the issue is, and I think the reason Verizon's doing it is they have multiple uses for that fiber. So it becomes very difficult to say exactly how much is being spent on wireless densification when you've got a multi-use network like theirs, which their extent in Boston, for example, they're now putting in Fios in the sort of the hole in the donut in the greater Boston area where they didn't put in the first time. They're going to use it for enterprise, they're going to use it for wholesale, and they'll use it for mobile 5G. So I think for anyone, the most efficient way to do it is to have that kind of multiple use, whether you're buying your fiber from a private vendor or doing your own. Ideally, that is going to be multi-use. And also to the point that Jason was raising earlier, which is that just vis-a-vis the cities where you're deploying, they're looking for that kind of, for as many different uses for each time their street is dug up as humanly possible, which also goes to one of the major cost factors in this whole deployment issue, and one of the major time factors and one of the major issues for investors, which is potentially a multi-year, and the next panel will talk about it at greater length, but it's got to be raised. Yeah. There is a very high cost in terms of both dollars and time for the whole permitting, siting, rights of way, that whole process. All of that plays into this, and potentially on the fiber side.
How do you, maybe Mark, I'll start with you, is when, and Pat, I want your reflection on this too, if they're coming to you and saying, okay, now, like to Anna Maria's point, I'm going to be a fiber provider with multiple use. I'm not just dependent on wireless anymore. I mean, they're changing their business models dramatically. AT&T, especially, buying an enormous amount of content through Time Warner, which soon will close. How do you? I mean, do you see that as we're going where the puck is going, or where is it just a kind of a desperate flee to get away from the wireless commodities that Sprint and T-Mobile have forced them in?
Well, I mean, I think that for AT&T in particular, and Verizon as well, they both have a very large challenge in servicing a dividend structure. So both companies have a legacy telephone company capital structure, and which is becoming, less common in the communications world. Their biggest competitor, Comcast, has a much more lean capital structure. Gives them tremendous financial flexibility and strategic flexibility. And so some of the diversification AT&T has done, if you look closely, they've bought businesses that have low capital intensity, that generate better cash flow, kind of asset-light businesses, both DirecTV and Time Warner, will improve their dividend payout ratio and enable them to sustain that capital structure. I've written for years that we felt that the dividend was a risk, but I think that they've taken a realistic view of it and taken steps to both boost the cash flows of the company and try to add adjacent capabilities that would give them a more defensible position against the commoditization of wireless, be able to offer the consumer a differentiated product to establish pricing power, or reestablish pricing power. And so that's the track they've taken at AT&T. Verizon's approach to reestablishing, differentiated pricing power is to, double down on network. Same playbook, really, that was for 4G, to accelerate before the standards are set, establish, a little bit of a competitive mode on network quality, and try to regain pricing power that way. And Sprint and T-Mobile differentiate on price, because that's the part of the market that they serve. So it's very interesting how kind of all three, four companies. That was a slip, yeah. Kind of have a bit of a different approach on that.
Okay.
Yeah, well, from the fiber deployment standpoint, putting these ideas together, from fiber deployment, we're going to need a couple of things to enhance that business case. We're going to need the potential for top line growth, and we are going to need some efficiencies on the cost side. From the top line standpoint, and this applies to wireless as well as wireline, if you look at those capital numbers and see how the capital went up with each successive generation of wireless, you also saw subscribers growing. You also saw towers growing, and you also saw revenues growing at pretty significant clips. And at this point, you see those subscribers and those revenues slowing, and you see the subscriber base diversifying to different types of connected devices. So we're going to need, the flexibility to build, businesses around those other types of connected devices. Those might include things like machine to machine. They might include video subscribers. Some of the devices that are going to be taking up a lot of the network space are video enabled devices. 4K TVs are going to be growing significantly over the next decade. You see the companies, as mentioned, getting into content, advertising, telematics, all kinds of Internet of Things applications, and we will be seeing how those play out. We're going to need some flexibility to be able to see if we can monetize the infrastructure through those businesses. On the cost side, I think the key thing is being able to rationalize our networks. We have TDM networks. We're operating TDM and IP networks, and if we can get some of the costs out of that, as well as some of the right-of-way poles, siting, those kinds of costs down, those can be helpful too.
I guess that brings up you mentioned the business cases for 5G, but I guess I'd ask both of you, Aaron and Anna Maria, if I'm in an elevator with AT&T or Verizon, and I say, what is 5G? And what is it? And what's the business case for 5G in 5 sentences or something? I know that's a loaded question, but people throw around, autonomous cars and IoT, and it's hard to really, I think Verizon might say fixed wireless first, but then what are the layers upon that?
I think fixed wireless is probably first through nth.
Okay.
And then you've got, in terms of capacity use, at a minimum, that's kind of going to be the major use. And then you've got all of the things that you've talked about. But essentially, I'm not a technologist, but as I understand it, the point of 5G is a lot more capacity, a lot less latency.
Yes.
Basically, that's essentially what it's about. The challenge is going to be to monetize that. And as we are finding out in the wireless world, and the reason it is getting harder and harder to fund out of cash flow, people are happy to consume more and more, but they're not willing to pay more. So it's become, voluntarily or not, this industry has been a great bargain for consumers because it's just given way more capacity per dollar spent by consumers. And that is not going to make it easy to get that extra $10 billion per year.
I was just going to say, so if you're spending $40 billion,
right,
what is the pricing power that a Verizon versus AT&T has for IoT? That's the question.
Well, we kind of look at it as with IoT, if we think about 5G, the easy use case is fixed wireless because it opens up the huge cable broadband opportunity, or the huge broadband opportunity out of the ILEC footprint, right? It opens up tens of billions of addressable opportunity, essentially. But beyond that, I think we struggle a lot with how do you make money selling connectivity, even if you have millions of things or billions of things or whatever the number is. When we look at forecasting connectivity dollars from that connection, right? Today, the M2M market in the U.S. for connectivity is about a $2 billion market. We see by 2022 that going to about $7.1 billion, which, if you think about $7.1 billion on a base of $150 billion in postpaid service revenues, you're not really making a dent in fixing your top line. And if you think about all the capital you're deploying to get that low latency network, you've got to think beyond that as far as getting kind of returns on that capital. And fixed wireless probably goes a long ways to getting that. But it's very hard to understand kind of monetization models that really allow really super scale of dollars. I think if you sit in any room at the corporate strategy and planning level at any one of these big operators, it's always, you need something to move the needle. You know, $100 million in new revenue doesn't move the needle. $500 million doesn't move the needle. You need $1 billion plus in new revenue. And that's why you see, you know, AT&T, Verizon making the moves they've made, whether it's AOL or what's now Oath or AT&T Time Warner or some of the other operators, where you see these, you know, big, you need to make big plays into big, huge addressable markets. And we really struggle with the addressable market in the connectivity business on the IoT front.
As we head into like a 5G world, a guy I was traveling with who's very smart was saying that there is no need eventually for going to be a wireline broadband connection and a wireless broadband connection. How do you, I guess, one, do you agree with that? And then secondly, that begs the question, what's cable's role in all this? You know, we heard from Comcast. Many in my world think Comcast is the smartest guy in the room. But if everything is going wireless beyond the MVNO relationship with Verizon, they're not there. So, again, a loaded question.
Yeah, I mean, I think you still have basic coverage issues. I mean, I live in Kansas City and I don't have wireless service in my home.
Okay.
I have a broadband connection. I'm going to have that connection. But to the extent you can get good coverage into the home, one of the things we've seen with unlimited is as every operator opened unlimited, you saw consumption go up, not in urban areas. Urban areas, the consumption pattern has remained relatively the same. If you look at rural America, tier 3, tier 4 metros where broadband hasn't been is not ubiquitous as far as speed and availability, the minute you opened unlimited on LTE, you saw video consumption go up. So that tells you that, you know, that one connection, if you have the capacity there, if the pricing is right, people are very likely to, you know, dangle off that wireless device if it works to provide, you know, that, at least that video experience, which I think was really telling to us is, you know, as far as the capability of wireless and you know, where the potential is there.
I guess, you know, I'm going back on 40 years of watching the industry. Fiber is always going to have more capacity. Mm-hmm. You're bringing it very close to the home. I mean, in the case of the Verizon deployment, you're bringing it to the home. As we create more wireless and other capacity, uses are going to create more desire for capacity. So I think ultimately, people are going to want that home fiber connection. Mm-hmm. It's more efficient. I mean, the only way you get wireless to everyone is to bring fiber backhaul to almost every home, right? So I don't, you know, I have a hard time seeing it disappearing as a home connection, but maybe I'm just not creative and imaginative enough.
I think it's somewhat semantics. You know, really what you're talking about is the demarcation point between the carriers, you know, like network termination and the device. Is that inside the home, or is it on a pole outside the home? Who owns and manages it? But we're really kind of in a wireless world today, you know, with Wi-Fi in the home. So those network protocols will evolve and become more managed and licensed and inside the home or stuck to the window or whatever. But I think the cable world and the telecom world will definitely blend, and you will probably buy one connection from a broadband company in the future, and whether that broadband company is T-Mobile or Comcast or Verizon, I think those players will be competing for that business.
I agree that with Anna Maria that fiber is going to be part of the solution wherever you have mobile services. It's going to be part of it. The question is where. I think you ask what is 5G, and you know, at least my thinking now is that 5G is really a rationalization of the provision of services to variegated demand wherever it is and whatever it is. And I would also distinguish, by the way, between video on 5G that is delivered via a fixed service and the idea of a mobile cellular approach. I don't know, if we are seeing video via mobile cellular yet, and I think the case of intensifying a millimeter wave to provide that is one thing, but mobile is going to be something different.
If you look, so to get there though, it does need a dense fiber footprint maybe in the urban core. A lot of people say, well, look what's happening in Asia, look at what is that apples to oranges from the US perspective as to what we're seeing? Because to roll out, I remember with SoftBank, it's always been said, Sprint can't do what SoftBank did in Japan because Japan's like the state of California in terms of size. So how do you think about it?
I mean, if we think about it, I think you look at density alone, and it is the state of California analogy fits well, right? You take a map of the US and look how much territory you have. And yeah, it's not all going to have the same service characteristics, but you need coverage, right? So LTE, you need coverage, and then if you're going to 5G, you're going to need some ubiquity of coverage within kind of highway corridors in those areas across the country. So it's not a similar deployment as, say, Tokyo or a dense environment like Japan, because ultimately you're covering a lot more land. The geo is just that much larger. And I think the other thing is access to infrastructure is different if you look at either South Korea or Japan, and the ability to get dark fiber at very low prices from state-driven regulated entities is very different than in the US, where it's a completely commercial environment. So the rules of the road are very much different, and the geography is different, which really drives a different deployment structure in a lot of ways.
I mean, you're talking basically about cell sites that are a few hundred feet, right? So that's not going to cover very sparsely populated areas, but you may cover small towns, you may cover the anchor institutions, the hospitals, universities that are in smaller towns, particularly if those towns are smart about partnering and welcoming 5G in a way that some urban areas have not been. If you've taken the fiber nearby on the highways or for other reasons, are you going to take it out to every ranch? It's highly unlikely. But again, depends very much on, are you looking at flat topography? Are you looking at mountains? So I mean, in the US, one of the issues is just the sheer diversity of the terrain you're dealing with, as well as the density. But I would not be totally pessimistic for small towns and rural areas, and I think their willingness to partner is going to be a big part.
And I think that's one of the reasons Verizon is testing in the markets it is, but different topographies and weather patterns and whatnot. But if you look at, as we see the 5G cycle, Peter touched on the spectrum bands used before, and the irony of all this is if T-Mobile is going to move forward, which they've said with 5G on 600 megahertz that they got from the broadcast auction, that's easier to deploy, faster. They could definitely have the bragging rights of being the first to 5G player. But then you have Verizon doing a totally different strategy, doing it on millimeter wave with dense urban core footprint fiber, which is, so they get there later, but maybe I would argue maybe a better platform. A long way of saying, one, would you agree with that? And then secondly, if you do like a fiber light rollout of 5G, is that not where the world's going? Because that fiber is so critical. And I'm an unabashed fiber bull, so I'm coming at it with that bias. I should know.
We do know that.
Well, I'm not a technology expert on how 5G on 600 megahertz would work. And given the three main goals of the standards body of having very high throughput, very low latency, and handling many thousands of connections simultaneously, It doesn't seem like that will be a differentiated offer given the assets that other carriers have. So,
Meaning the T-Mobile.
correct.
Yeah.
So could Verizon duplicate this offer as well with its strong low-band spectrum holdings? That's a question I have. So, there may be some type of marketing genius in what comes out of that, which is really, I would credit T-Mobile with having that, very much so. A very, very strong marketing power that is real and has translated into success in the market. But from a technology and real kind of long-term value perspective, I'm not sure they would really generate a differentiated position. And if they had a different asset portfolio, I don't know if they would choose that deployment either. So I think a lot of carriers are choosing their 5G roadmap to line up well with the assets they have, right? So Verizon has moved quickly to assemble millimeter wave assets. They arguably have utilization issues on their sub 6 gigahertz spectrum position. So moving faster not only gets them to 5G faster, it starts to offload 4G traffic faster, and it extends the life of the 4G spectrum portfolio and network. And so there's another kind of qualitative benefit that when you think about the business case for them accelerating 5G, it's really part of that as well. A small cell footprint allows them to first do a lot of frequency reuse on 4G and then deploy 5G more efficiently and kind of balance the capacity load out into the future that way. AT&T has a very large set of spectrum bands that are unused. They'll be putting into service over the next year and a half. They talk about frequently the 60 megahertz of spectrum, and so AT&T's urgency to really accelerate and offload onto a small cell platform is less acute, And so I think all of these, as we hear the different plans from the different carriers, we have to consider, they're really kind of playing to their individual strengths and weaknesses.
Yeah, okay.
I mean, to me, one of the key points from the first panel was, I think it was the gentleman from Nokia saying next year we're going to have the chipsets and the capability to have handsets that work across bands. Because I think, if you think about a person's typical day, even if you're starting on 5G in the urban core at your office, assuming you're still working in an office, you're going to be driving out of there and out of 5G territory. And so pretty much the key is going to be for any of these players to have the ability to work across a whole range of bands.
And Aaron, maybe asked another way, how do you, what's the most important component ingredient of 5G? Is it having a broad spectrum portfolio, as Anna Maria mentioned and Mark mentioned, or is it having fiber density, in which case cable actually might be the best position, or geography where AT&T has an advantage over Verizon? How do you look at it?
I think we see that one of the things you can do is make more efficient use of your spectrum with that deeper, denser fiber play. So we believe fiber is going to be core to the network. And honestly, fiber is probably really core to LTE right now. And getting deeper, denser fiber is core just to making your LTE network work right now. I think we're in a huge phase of LTE capacity addition, which is requiring deeper, denser fiber in every major metro market around the U.S. So just to keep LTE on par, you're going to need fiber, and then to provide that bridge to 5G, you need that deep, dense, capillary system throughout the metro. And whether it's those last 200 meters are connected with something millimeter wave wireless, that's up for debate. But if you can't get the fiber to the hub location where that's occurring, then you're not going to have a network. So ultimately, the fiber is really very critical, and I think you can make more efficient use of spectrum. So spectrum is probably becoming, it's still critical, but somewhat less critical.
Okay. Are you seeing that with your constituents? Are they talking about that as well, or how are they thinking about the world right now? Because in some case, I know you represent a lot of the RLECs, right?
Right.
The rural LECs. I keep saying the pipes matter, and they're the pipes. Yet
Yeah.
from my view, the stocks have been left for dead here, these poor little RLX.
Yeah, I think it's absolutely correct that fiber is going to be critical. Now, the question is, which assets are you going to use at the end of that to serve which segments of the population? I think that we have an LTE macro infrastructure out there. That may evolve over time if we're not using 39 and 28 gigahertz spectrum out in areas of rural America. There are other assets to utilize, and I think this is really about rationalizing the best tools that are available, whether that's a fiber to the home or a fiber to a tower with a fixed wireless connection on the end, at whatever spectrum is available to provide that. I think that this is going to be a positive development for consumers in all of those areas. Our rural companies, that they're prepared to provide the services that are needed, as the demand arises. So will there be video? Will that be video, self-driving cars, et cetera? We don't know, but they will be able to play as providers of key infrastructure here.
Got it. Peter, do you want me to take any questions? That's what I was asking, Carolyn. Is there cards or anything?
Yeah, the audience has cards. If they want to ask questions, they can ask too.
Okay. Do I collect them, or how do we get them?
Someone will collect them.
Oh,
and
okay.
send them to you.
Perfect. Okay, great. I just didn't want to keep going. Can we talk a little bit about any new, unique things you've seen in the infrastructure space that might be worth noting? We've seen the mobility sites, which I'm in New York all the time, and to be honest, I knew they were there, but you really can't. The naked eye doesn't really notice them, which is a good thing. Any other unique things you're seeing on the infrastructure space that is different?
I mean, I think there are a couple different things going on that we're seeing. One thing has been, one consistent problem in the non-macro outdoor side of things is deployment and how you get things deployed in a rapid fashion. And one of the things we have seen T-Mobile do recently has been active with strand mount deployments, which is something different that I haven't seen the other three carriers embrace as heavily. And that's putting the actual small cell or on cable strand or some sort of telecom strand that's on a pole.
So strand mounts, just to be clear for the audience, it's the little box you see hanging
it's
off.
a box about half the size, a series of boxes about half the size of the one on the right, hanging off the cable strand, and therefore you're able to tap into that for backhaul or connectivity to that site, as well as you can bring power in a little bit more, potentially more efficiently. And from a siting perspective, it's potentially slightly easier to site, as the cable company already has rights to do different things on that strand based on their franchise. So I think that's one of the things we've seen different from a deployment perspective. T-Mobile's been pretty vocal with kind of the volume of sites they're looking to deploy, and I think a lot of them are coming that way. As you look at achieving velocity, there are big predictions around site deployments, and to hit those hundreds of thousands numbers over the next number of years, you need to find ways to be more efficient, and that's one of them. I think the other thing we're seeing on the fiber side is just heavier strand counts being deployed that allow easier splicing in different locations. So historically, 192 strands 10 years ago was a big deal. Now you're looking at 1,700, 3,400 strand count deployments, which give you heavy degree of ability to splice and inventory in different locations.
Anyone else?
I thought the first panel discussion of wireless backhaul was fairly interesting. The ability to direct it, from a cluster of within a cluster of cells to the 2 or 3 cells where the fiber can run. I thought that was an interesting development.
Great. I have so many good questions here. Okay. If I could just do a rapid fire. If spectrum is less critical than having the deep physical fiber plant, I guess that begs the question of what is the implications for future spectrum values. We just got through an auction where people like me were saying that would go for $80 billion, and it went for, what, 15, 17? So, I mean, so that brings into question, like, names like Sprint that owns a bunch of spectrum. That's most of their value. Dish clearly comes up. How do you think about it?
I mean, if you're looking at the incentive auction as sort of a landmark, there were conditions. There were players who were, I mean, the major carriers were basically told you're not going to get the prime spectrum. And it was sale of low bandwidth, I mean,
Right, low band
600
spectrum, yeah.
megahertz as opposed, at the point where suddenly people are looking at millimeter wave in enormous amounts becoming available. So it was sort of a conjunction of worst possible
Right.
circumstances. So I think there are a lot of things you can learn from that auction in terms of how not to devalue the spectrum. So I wouldn't necessarily look at that as an indicator.
Yeah, I think if you look at the history of the spectrum auctions over time, there's a lot of lumpiness up and down in the value of the spectrum at a given time in the auctions. I think the AWS-3 spectrum before that was fairly expensive, probably one of the most expensive auctions. And if you slice those spectrum auctions into rough, 1G, 2G, 3G, 4G categories, I think you would see that the value, at least since the FCC started conducting those auctions roughly in the 2G period, and if you take out things that or auctions that ultimately did not bear fruit, companies went bankrupt or whatever, I think you see that the value of the spectrum in the 4G period went up significantly compared to both 2G and 3G. So I wouldn't write it off just yet. And another thing is the value of the spectrum is cumulative. So, when you retire spectrum from 1G, you repurpose it for 2G and 3G, and I think you're going to see that as well in 5G. Our discussion about the 600 and
Well,
the 700,
coverage.
800.
Kind of honing in on the economics, someone I think on the panel said 80% of the cost is the deployment and the labor. Can you expand on that? Because am I right in saying the fiber itself is just glass and not that price?
Yeah, I mean, if we look at what it costs to build a mile of fiber, now it varies whether you're urban, rural, and a whole number of other factors. New York City, obviously, very expensive. Somewhere in rural America, not so expensive. Aerial versus underground, difference in cost there. But when you look kind of consistently across those factors and look at portions, you see the vast majority of costs, whether you're putting it on a pole or putting it in the ground, ultimately is the people on the ground that are doing that labor. That's the guys digging the holes along the way to push it through the ground, the teams running the machines, whether it's a ditch witch or some other form of feed to push the fiber. You can't get around the labor cost. It takes, I live in Kansas City, again, Google Fiber City. It's amazing to watch those guys, how many people, the sheer volume of people they deploy to build a block of fiber is surprising. Until you watch it a lot, you don't realize just how many people are actually required on a day-to-day basis to move a network just one block. So ultimately, it's sheer people cost.
And we've talked a lot, or Peter's brought it up in the earlier one, IAB, integrated access backhaul. Will that have a material cost on the cost of deployment? Could that lower it? Because it's my understanding, Peter, correct me if I'm wrong, but it's kind of you don't need fiber you can use 5G as the backhaul. You don't need fiber to every single small cell, but you still need a lot more fiber.
Well, you need to get you need to have a hub point first.
Right, okay.
And how deep does that hub point need to be? I would think most people would argue that today's networks don't have fiber deep enough to support those hubs at this point. So it's,
Okay. Here's one for Moody's. What are the chances that the cost to deploy 5G will exceed the cost of capital?
I'm not sure I
So
understand that.
I guess, will the return
be
on
funded?
invested capital be in the black, I guess
Oh.
is the way I'd say it.
Wow. I don't know. That's a tough question.
It's a lot of money.
Yeah.
Right?
So
because you have to assume something on pricing, which is hard, and yeah.
yeah, I think. I also think that part of the business case of this investment is defensive. You know, you have companies that generate tremendous amount of operating cash flow, Verizon and AT&T, at very, very high margins, right? Their wireless businesses have margins in the 40s and capital intensity of 15%, and so any kind of reasonably capitalized structure should be very profitable, and they are.
Right.
The problem from a funding perspective is that most of the profits are paid out to shareholders. And so I think that they have a very strong incentive to protect that business model. And if their capital intensity temporarily rises to maintain the profitability of the business and defend against, you know, kind of a business cycle that occurred in Europe where it was a negative feedback loop of lower pricing and underinvestment until consolidation allowed that to be broken. You know, so I think there's a strong incentive to protect the business against that, and many carriers are likely, you know, to make the investments regardless of the upside, just as a way to stabilize the business.
I mean, just to build on that, if you look at, you were talking about the problems of the RLECs. I mean, if you look at what happens to several of the RLECs have cut dividends, and the stocks collapsed, and the ability to fund collapses, right? So it's not an optional thing if you can possibly keep going and keep paying your dividends. You're helping yourself continue to be able to fund your business. I think ultimately, you know, you were talking about pricing, that really becomes the question. Can you monetize by pricing appropriately to cover the costs that you need to cover? And, you know,
But you have
this
to,
industry
you have to
has...
also, oh, I'm sorry to interrupt
No,
you.
no. I mean, the industry has gotten to the point where ARPU is saturated. Customers are no longer willing to pay more, but they want to get more.
Right.
So it is going to be a very difficult challenge, which is one reason I would go back and say spectrum is not irrelevant. I think being able to get a lot more spectrum is going to be important because you always have the trade-off between having to build more and more intensively or use more and more spectrum. So ideally, we will continue to get spectrum to make it possible to have economic deployment.
Yeah, I was just going to say that you know, the case for 5G, you know, will have some incremental revenue component. The case for not making the investment may be a deterioration of industry price and you know, kind of mean reversion amongst all the carriers towards more of what, you know, T-Mobile ARPU, which would be, you know, around $10 per sub that the big guys would give up.
Yeah.
If the market became truly commoditized, where all carriers were able to achieve the same price, and $10 per sub per month times 70 million times 12, it's a big number.
And that kind of leads into another good question here. Does 5G present a unique opportunity for a new wireless provider entrant? And I guess maybe I would say what I think, and then I can see if you agree. I think this is very different. I think what Google Fiber showed us is it's not easy to get into this business, even if you're the most capitalized company in the world, and or well capitalized. But so it's when people try to pull the comparisons of like, oh, this is like Amazon buying Whole Foods, they could do that. But Amazon doesn't have spectrum, and that is a huge barrier to entry of a finite asset. Am I crazy?
Well, there's a little venture-backed company in Boston called Starry, which is trying to enter the fixed wireless market. They're doing it, they claim, at a cost of $25,000 per major antenna, which feeds into rooftop antennas. They're renting their their fiber. So essentially, they're doing it on absolutely minimal capital. We'll see if it works. They're operating in the 37 to 40 megahertz spectrum. We'll see if that works out.
Yeah.
But, I mean, they're claiming to offer a couple of hundred megabits of symmetrical fixed wireless to homes for $50 a month. So, you know, does that make sense? Is that going to work? Is this the next WiMAX going bankrupt because it's privately funded? Who knows? But people are trying, I guess, a variety of models.
Another, I can throw one more out there. Another new and unique, I think the previous panel talked a bit about CBRS spectrum. I think one of the things we're potentially going to see in the in-building market is ability to leverage CBRS to create LTE roaming opportunities. So you could see a number of in-building providers that have a scaled portfolio of buildings deploy CBRS networks in those buildings and then lease them back to operators. It's not a true end-user service operator, but it's just a different way of leveraging a spectrum band and infrastructure to potentially provide additional level of service back to customers, which could be interesting.
Yeah, I think areas where you're going to need to innovate to solve some of those problems that were highlighted in the first panel are ripe areas. Another way to think about it is to look at the ecosystem that may evolve around 5G or whatever 5G is.
Right. Right. Okay, well, we'll end it there. Thank you to everyone. That was terrific. I really appreciate it. Thank you.